Hi there, welcome to The Open right here on BNN Bloomberg. Let's get to those big stories we're bringing you from our newsroom. WestJet and Transat are suspending all flights to Cuba due to that island's fuel shortage. Cuba has warned that airlines will not be able to refuel at its main airport for at least a month. Both carriers say flights will be suspended until the end of April. Air Transat and WestJet are in the process of sending aircraft to bring customers back to Canada. And they say that these planes will carry sufficient fuel to safely depart without reliance on local availability. Air Canada has also suspended flights. Shares in Spotify jumping 8% in the pre-market. The music streaming giant added a record number of users in the fourth quarter, far surpassing expectations. The Swedish company cited the launch of an enhanced free tier for users as contributing to the growth. Operating income and the first quarter forecast for monthly active users also beat estimates. However, revenue from ads shrunk year over year. Shares in CVS Health slipping. That company reported fourth quarter earnings and revenue that beat estimates and reaffirmed its 2026 profit forecast. The drugstore and health insurance player continues to be dogged by concerns over federal rates for Medicare insurers. CVS was among the health insurance stocks that plummeted last month after the White House proposed keeping Medicare rates roughly flat over the next year. And there is a look at U.S. stocks. Looks like they are going to hold their own in trading today. And let's check out how the TSX traded yesterday. It did get support for much of the session from gold prices. And let's have a look at how oil is doing this morning. Oil prices, they've had quite a rally over the past few weeks, actually getting on for 2 months and edging up again today. And let's get on to gold, one of the most exciting stories for commodity investors over the past 2 years, holding above $5,000 US, but still down from that 5,500 plus record that it hit just a couple of weeks ago. And let's check out the Canadian dollar. It has had its own rally against the US dollar over the past few weeks, holding relatively steady today, not far short at 74 cents US. And finally, Bitcoin. Bitcoin, no joy there for crypto players. Of course, Bitcoin over the years has seen major sell-offs. But Bloomberg arguing yesterday that this sell-off is a major test for institutional holders of their nerve. Do they want to be in the biggest crypto? And later on the ETF report, we are going to look at some crypto ETFs. Let's get to today's market stories. We just talked about shares in Spotify jumping in the pre-market. However, Coke reported a miss, and we are keeping an eye on Air Canada. That company suspending flights to Cuba because of that aviation fuel crisis in the island nation. We're joined by Grant White, Portfolio Manager and Wealth Advisor at Endeavour. Grant, great to see you. Thanks very much indeed for joining us.
Andy, always my pleasure. Thanks for having me.
What is catching your eye this morning in the markets?
You know, that Spotify report you were just mentioning really stood out to me. I mean, I definitely saw a nice surprise to the upside from that one. And so I'm pretty excited about it. Spotify is a company I've liked for many, many years. At times it's been challenging to buy. We've been shareholders off and on over the years. But, you know, really nice report. And actually, the best thing about this report is not the top line. It's really the bottom line that I love about this, because it's showing that management has really got a handle for their company and really understanding their operating costs going forward. And I think that's going to be really important going forward, especially in the content space like Spotify is in, because there's, as we know, I mean, there's lots of challengers out there. I mean, Netflix now has podcasting and so on. So, it's a challenging space, but Spotify is proving time and again that they can, one, add more users, and two, they can manage the bottom line very well. And we're seeing that. I think they hit a 33% margin based on the recent report, which is just a fantastic number, and they're being rewarded for it today.
Let's put up maybe a 5 or a 10-year chart for Spotify. You wouldn't be buying more, though, right now? It's a hold as far as you're concerned?
You know what? We were looking at it pretty hard this morning. I might be leaning towards more of a buy. Yesterday, I was a hold, to be quite honest. But looking at this report, it's starting to change my mind a little bit on this. So we're going to take a closer look at it. But yeah, I mean, I do love the story. It's a matter of pricing more than anything. And if we think that it's a good pricing opportunity at this point, one thing I did, like as I said earlier, I really like how the company is managing that bottom line. And so I think that's what's really giving us poised to take a second look at it right now. But we might be shifting it to a buy very soon.
I don't want to get bogged down too much here on the Swedes, but it's way off its high. Why is that, Grant?
I think that's a lot to do with the challenging space. I also think it was overvalued before. I mean, it is a great company in my mind, but I think that, prices just got ahead of it. And so it was due for that big pullback. Competition is heavy. As I mentioned, Netflix is in the game, and many, many others, whether it's Apple, Google, you name it. So lots of competition out there. I do think that they have a genuinely good moat, that it's a great experience with Spotify. I mean, I'm a Spotify user myself, as many of the viewers are, I'm sure. And it's really just an outstanding experience. And so there's a lot to like about it, but also content is king, and they own some of the best podcasting properties out there. So all this to be said is I think that it's a great company, but you just got to be careful on pricing because we are going to see fluctuations like you were pointing out.
What about Air Canada? Maybe we'll put up a 1 month chart for Air Canada. Cuba's a chunk of its business, but of course it's so diversified. But fascinating. I mean, lots of Canadians over the years have been to Cuba on vacations. Something like a humanitarian crisis on that island now.
Yeah, it's. I mean, that aside, it's certainly a very challenging time for Cuba. But with Air Canada, I mean, I think this is kind of the one of the latest things that one of the reasons I don't love investing in airlines is because you have all of these issues that can come up, and this is just the latest in a long line of things that can happen to an airline company that can throw a wrench in their plans. And so, I mean, you're right. This is a very diversified company. They're going to be fine through all this. The suspending flights to Cuba is not the end of the world, but it does point out the challenges that airline companies can face, whether it's fuel costs or just general operating costs, labor, you name it. And so, we've got Air Canada as a hold right now. I think as you're looking at airlines, Air Canada is a great airline. I think that they've shown time and time again that management again has a really good handle on this business and the industry. They can do really, really well, but it's always a challenging space, and there's always factors and curveballs that come out of nowhere. But as it seems. So for those reasons, I've got it if you're an owner of it today, I've got it as a hold, and I would keep it there. I don't love the current space for it right now, what's going on, but if you do like airlines, I think Air Canada is a good airline too.
And Coca-Cola, maybe you could put up even a 20-year chart for Coca-Cola. It's been around so long.
The longer the better.
Yeah, investors weren't thrilled by the latest tidings from the company.
Yeah, I mean, Coke's an amazing business, and as we all know that. I mean, I think you can be really happy owning Coke for a long, long time, and they're going to do pretty well. I think from a short-term perspective, if we want to look at that, it is going through again some challenging times. But these are these ebbs and flows that you're going to see with a great company like Coke. You don't go into this company thinking I'm going to own it for the next 6 months, though. I mean, I think if you're buying this company today, it's because one, they've got a great free cash flow. Again, time and time again, this company is just going to chug along. They've got great product development. I mean, I'd love to see how things shake out with some of their newer products over the next year. I think there is some growth challenges. I mean, it's something that we'd be looking at more closely to say, yeah, I'd like this to be a buy. But I think, frankly, Coca-Cola is a great company. You can own it for 20 plus years going forward, and I think you're going to do very, very well on it. But for right now, I think I'd have it as a hold. We wouldn't be adding to this position today, and it's largely just because I think the short-term growth environment's challenging. Emerging markets is going to be a key factor for them, and I'd love to see how they're going to continue to grow there and hopefully beat out their peers.
What are clients saying to you about AI, especially the ones who've been in these formerly high-growth software stocks, things like ServiceNow or Salesforce or Adobe? Are clients in those, and are they disappointed?
I think this is a really challenging time for the SaaS companies. But to be clear, I don't think software is going away by any stretch. I mean, I think the rumors of its death is vastly overstated. I think that the challenge is going to be is what software companies are going to do well in this environment, because I think that like margins are going to be vastly compressed as we're seeing now. And I mean, and when you look at like whether a company was trading at 30 times free cash flow or 37 times free cash flow, I think that number could come down to 17 times free cash flow going forward. And so with that in mind, I think there's a repricing. But I also think there's going to be really big winners in this. And I think a company like Salesforce can do very, very well if they adapt well. And there's others. And, we're seeing it in some of the companies like, Databricks and companies like that are adapting extremely well and are going to be open to plugging into other things. So as it relates to AI, I actually think this is a really interesting time because, we're actually, the proof is going to be in the pudding now versus a lot of the speculation. I think we're going to need to see AI actually start to prove out the thesis more and more. And the software companies that adapt well to that, I think are going to do very, very well. That being said, I think that there's a lot of companies that aren't going to do well in that. And so picking the winners in that is going to be challenging. So I'd stick to quality. I do think Salesforce is going to do well in it, though.
And just finally, one stock we're tight for time, but one stock you like the look of right now is Fairfax Financial. Just give us your reasoning on that, please.
Yeah, I mean, I think that's a state of where we are in the markets as well. I'm going to more quality, and there doesn't get too much higher quality than Fairfax in my mind. Great business, great management, great free cash flow, consistency there. So, we've got Fairfax as a buy, and I think that where we are in the market, if you want a really great core holding that's going to do very well for you over the next year or two, then Fairfax is a really good fit. And again, you're getting at a pretty good pricing right now. And so, I'm excited for their earnings report later this month. I think it's going to look good. But yeah, I think Fairfax is one that you can feel very confident in owning, and especially when we're likely to see more volatility this year, in my mind.
Grant, thank you very much. Grant White of Endeavour Wealth Management. We've lots more ahead on the show. We are going to focus on this dire situation in Cuba. Hotels are closing amid food and energy shortages. And all of the country's 9 international, or all 9, I didn't know they had 9 international airports reporting having no jet fuel available. That's ahead. A U.S. fuel blockade is having a devastating effect on Cuba, with that country facing its worst economic crisis in nearly 70 years. CTV's Heather Wright has more.
This is just the latest sign of the dire situation unfolding in Cuba. There isn't enough fuel for airplanes to refuel on the island as the communist nation struggles during a deepening oil blockade.
We came to Cuba knowing what to expect. There's some things you'll have every day, some things you won't. I mean, that's a norm for here.
But what has been the norm is quickly deteriorating for the people who live in Cuba, with shortages of food, fuel, and medicine. Air Canada has announced it's suspending services and will send planes to repatriate the roughly 3,000 passengers still in the country. WestJet, including Sunwing, has suspended ticket sales to Cuba and will begin what it calls an orderly wind down of its winter operations there, while Air Transat has issued a travel notice allowing for flexible changes or cancellations. This all comes as Cuba experiences the worst economic crisis in nearly 70 years.
By the typical definition of what we think of as a failed state, Cuba is sort of on the cusp of it.
For decades, Venezuela had been the primary source of oil for Cuba, a source that was cut off when the United States captured Venezuela's president in January. Then U.S. President Donald Trump said he would impose tariffs on any country that sells or provides oil to Cuba, further depleting its sources of fuel. The government has closed some hotels and is relocating guests to save on resources. Fuel sales are being limited while school and business hours have been reduced. Tourism is critical to Cuba's economy, and those returning home worry about ordinary Cubans.
It's just really unfortunate because of the Cuban people, and they have so many shortages there as it is.
Cuba has said it is open to negotiating with the United States to end this oil blockade. Meanwhile, the government is telling its citizens to prepare for hard times beyond what they are experiencing now.
And just to update you, last night Transat also said, yep, we're temporarily suspending all flights to Cuba until April 30th. WestJet and Air Canada making similar moves. Up next, we'll hear from the Ivanhoe Mines co-founder, Robert Friedland. He says the precious metals rally has room to run. Ivanhoe Mines founder Robert Friedland says copper has a very bright future. Of course, he's been saying that for quite a while, especially if the US Fed cuts interest rates. We got perspective when he spoke to our Bloomberg partners on the sidelines of Africa's biggest mining conference taking place in Cape Town, South Africa. Let's have a listen.
It's good, very good news for the mining industry, Jennifer, because this is the beginning of a scaled vault to attract critical raw materials for the non-military side of the U.S. economy, so that major companies that are trying to build data centers or electrify the economy or build things or industrialize the country have access to critical raw materials. So it's part of the general understanding that we can't build a better, more modern world without the same materials that are being mined here in Africa.
Well, and that just leads me to your companies and some of the mining sites you have. Do you expect, or how do you expect your companies to be involved in this project?
We're going to help fill that vault. The mining industry is very happy that the United States government, led by U.S. Exim Bank and other arms of the United States government, recognize the need, and that $12 billion, which is roughly $2 billion of equity and $10 billion of long-term financing from Exim Bank, is scalable. And so it's really a very interesting scheme because it's market-driven. If General Motors, Mary Barra was there, right. She's the CEO. If she needs a particular metal, she can go to the vault, and the vault will go out and find it. So it's driven by market forces, and there's no reason why it can't be 48 billion or 72 billion and keep growing. And that's very good for the people that are here in Indaba.
How does that factor into supply disruptions that yourself and others experience, let's say, perhaps in the DRC mine and other mines that you work with? How do you factor in some of those supply disruptions if you want to expand this vault over time?
Well, our job is to reduce those supply disruptions because we've gone from a perfectly integrated, just-in-time world economy to an economy that's balkanizing. It's breaking into little groups, and that creates a real problem for critical raw materials. It creates friction in the world economy. It's inherently inflationary, and illogical though it may be, each nation is worried about their own supply chain because everything you touch, we either grew it agriculturally or we mined it. And lately, those metals that we mine are absolutely critical to the world economy, and that's why they're called critical raw materials.
Right. Are you on track with some of your mines? Let's talk in the DRC in particular. Are you back on track after some of those disruptions?
Sure. We're still producing. We're one of the biggest copper mines in the world. Yeah. We have enormous prospects for continued expansion. We've built the only modern copper smelter on this continent. It's the greenest copper smelter that's ever been built. It's a direct-to-blister smelter. It's very advanced technology. It's better than any smelter in the United States of America. We have hydroelectric power. We have very high-grade copper in the Congo. So the Congo will be a world leader. Currently, Congo's number 2 in the world, coming up in the world ranking to Chile. But yesterday, Louis Watem, who's a brilliant Minister of Mines of the Democratic Republic of the Congo, warned the Chileans that Congo's coming for the Chileans to be the number 1 copper producer in the world. And the rate of growth of copper production in the Congo is by far the fastest in the world. So that's very achievable.
Do you think the market then has caught up to the supply dynamics right now, or do you expect potentially we see prices go higher, in particular for copper?
I don't worry about prices. They will definitely fluctuate. That's the only thing we know about metals. But copper has a very bright future with 8 billion people on the planet, everybody wanting green, sustainable power, data centers, lots of national security-related demand, lots of electrification demand, almost everything you touch, including these cameras and lights that are enabling us to broadcast this to the whole world. If you go to Bloomberg World Headquarters, it's copper, 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 very high tech. So most of the old known mines are gradually declining in grade. Most of the easy mines of the world have already been found, but there's tremendous exploration potential, in particular on the African continent, to supply world demand.
Is the capital there, though? Why is capital still sitting on the sidelines? What's needed?
There's plenty of capital. We've raised close to $50 billion United States dollars for mineral development. We've reached a strategic investor agreement with Qatar, they have plenty of capital. The Saudis are also interested in this. There's lots of developing countries that are providing capital. A very good project today, if it's high grade, it can be developed in a responsible way, has no trouble at all attracting capital.
What is the risk, though, to your bullish outlook, not just on copper, but also the precious metals sector more broadly?
We like precious metals because they're precious. And sometimes you find precious metals associated with base metals. So we're mining zinc in the Congo, but it has a lot of silver associated with that. We frequently find gold associated with copper. And precious metals have been doing very well against the United States dollar. The United States dollar has been weakening against a lot of these hard assets. That's a process that could easily continue.
You believe that's going to continue?
If you lower the interest rates on fiat currency, if the Fed is in fact going to lower rates, then one could argue that these precious metals and base metals will do very well against the United States dollar. That's not something we worry about because we don't want to waste time doing that. We look for the highest quality ore bodies where they can be developed sustainably in partnership with local communities. And that latter element, the partnership with local communities, is what's essential to be a sustainable miner.
Robert Friedland of Ivanhoe Mines and many other mining companies. Okay, let's take a quick look at U.S. futures as we count down to the opening bells. And it does look as though we're going to get a marginally stronger open for U.S. stocks today. They're still shy of their record high. Where are we on the S&P? 6989 because, actually, let me correct myself there. We have a shot at opening in new record territory for the U.S. market today. It closed just shy of a record yesterday. We've got the opening bells coming up next. Okay, at the Nasdaq, Huntington Bank Shares is ringing the opening bell. Over at the NYSE, it's Boyd Group Services doing the honors. And at the TSX, it's the 2026 CIX Summit opening the market. It's time for the first 50. Trading is just getting underway, and let's check in on the markets and let's see if the S&P has managed to move into a record territory this morning, despite the worries over the software industry and the perennial geopolitical concerns. So where are we? 974, still slightly shy of the record high 978, 6978 on Tuesday of last week. And there is the TSX Composite moving above that 30K level again. So it's at least got a shot at hitting a new record high today, just over 33,000. The record was 33,176, and that was in late January the 28th. Some stocks on the radar include the airline stocks, and there is Air Canada. It slipped a bit in trading yesterday, and you can see under a little bit of pressure today, pulling out of Cuba along with Transat and WestJet. And there is Transat taking a hit of about 1%. The stock, though, quite a rally over the past year, up more than 40%. Prairie Sky Royalty, seen as a relatively stable way to play the oil and gas industry, coming out with its numbers. Raymond James says this fourth quarter report reaffirms our confidence in the stability and portfolio depth. And it says attractive yield, dependable, of 4%. And the dividend was actually increased for a 5th year in a row. Let's check out some U.S. stocks of interest. We're joined by Jeff Morgan, Deputy Team Leader for the Bloomberg News Equities team. Jeff, thanks very much. Datadog catching investors' attention today.
Yeah, Datadog is the top performing stock in the S&P 500 so far today. This had been one of those stocks that has been under pressure. As you mentioned, there have been software names that have been under pressure. Concerns about whether or not AI applications would come and eat their lunch. Datadog does a number of software applications, including for the shipping industry and container tracking and that sort of thing. The stock is getting a great big lift this morning. What happened here? Their fourth quarter results really beat expectations, both on revenue, on adjusted earnings, and on margins. And that is helping offset, and maybe perhaps more importantly, their guidance was a little bit weaker than expected over the quarter, but not as bad as feared. So this is one of the kind of themes that are ringing through a number of analyst notes this morning. Better than feared. As you mentioned, as we've been talking about over the last few days, there has been a lot of concerns about these software companies' outlooks, given the threat of AI, and this is one where there were a lot of fears that it would be kind of worse than expected. The guidance for this year is below Wall Street expectations, but not quite that bad. The stock is down 40% since its November peak, so a lot of bad news had been priced in. It's getting a pretty big lift so far this morning.
And S&P Global shares under pressure, and the profit forecast disappointing?
That's right. This is another one of the stocks that have been under pressure as a result of OpenAI, or not just OpenAI, but AI fears. It got pummeled last week, down 11% on Tuesday when Anthropic's Claude AI bot came out and said that it could do a number of things that kind of caught investors off guard, and it is getting whacked once again today. Profit, yeah, as you said, the guidance for this company well below Street expectations. The high end of the profit range, of the earnings range, is below what Wall Street had expected. S&P Global still expects to grow its revenues by 6 to 8% this year, but that's not enough. This stock is down quite sharply. As I mentioned, it fell 11% last Tuesday. It was down as much as 18% in the pre-market session. Looks like it's getting hit again today. Not quite as bad as that 18% pre-market, but yeah, 9% drop at the open here is this will be one to watch over the course of the day. I should also mention that it's dragging a handful of its peers, including MSCI, including Moody's, including the London Stock Exchange, et cetera, lower this morning as well.
Jeff, thank you very much indeed. Jeff Morgan. Up next, investors are hoping for yet more strong economic growth south of the border, but there's a risk they'll be disappointed. We'll have more after the break. Many investors think 2026 will be a year of acceleration for the U.S. economy, with less policy uncertainty and, of course, that so-called one big beautiful bill bringing tax cuts. Our guest says those hopes may be a little exaggerated. Let's get more from Jack Janasiewicz, portfolio manager and lead portfolio strategist at Natixis Investment Manager Solutions. Jack, thanks very much indeed. So far, of course, U.S. corporate profits, the U.S. economy holding up pretty well, despite signs of weakness in the job market. But you think there may be too much optimism about U.S. growth?
Yeah, there's a couple of things at play in here. And I think when you're talking about the impacts from the one big beautiful bill, and a lot of that coming back in terms of tax returns to the consumer, you know, the idea, I think, is that people are expecting all of these tax returns to basically be spent. And when you go back in history and look at that, that's not the case. And especially during COVID, for example, we saw roughly 40 cents on the dollar was spent, and the rest of it was either saved or used to pay down debt. So, you know, there's certainly, I think, at the margin, it's going to be supportive. We're just not quite as optimistic when we start to look at some of these GDP estimates that are pushing north of, 2.7, 2.8. We're probably closer to, 2%, 2.25%, which is still a very good backdrop, but not quite as aggressive, I think, as some of the other people our competitors are pointing out here.
And when you look at the real estate market, you see weakness in rents?
Yeah, and I think that's part of the inflationary backdrop, right? When you start to look at a lot of the real-time pricing that's out in the marketplace, when you look at things like Zillow, apartmentlisting.com, some of the indices that we see coming from regional Fed banks, they're all pointing to the same thing, and that's continued slowing in that portion of the marketplace. And again, we all know there's a lag between that pushing through to the real data that's being used in the inflation prints, and as a result, we think that continues to put a downward pressure on inflation. So I think moving closer to that 2% target by the end of the year I think that's our base case scenario and should continue to play out.
What sectors of the market are you overweighting right now, Jack?
Yeah, I think we have a couple of things going on here, and the big one is really the uncertainty around the disruption regarding the AI trade. And so as a result, we're trying to stay at least neutral there. It's certainly a stock picker's market when you think about tech. You have some pretty big dispersion in returns. Some of the winners are having some really good numbers, and the losers are having some really bad numbers. And unfortunately, some of that can cancel themselves out. So we're still trying to stay somewhat neutral tech, but it still seems like the cyclical portion of the market is going to be a key beneficiary of that AI trade, and we potentially could start to see some productivity gains kicking in, maybe some margin improvement there, and that really plays to the area of the market like financials, industrials, maybe to a lesser extent energy, and that's where I think we probably start to see the continued strength into the end of the year here.
When you say cyclical part of the market, economically sensitive stocks such as industrials, for example?
Correct, yes.
I mean, it's incredible. It's a thing we should look into further. It must be so hard to find an electrical contractor in the USA right now, or somebody to even, put in copper wiring for you.
And I think we're seeing that across the board with the general backdrop for the labor market, right? We're continuing to see slowing in the labor front. And if you look at all the posts that we saw last week, whether it was JOLTS, which posted job openings that were slower than expected. You look at the ADP number came in softer than expected. Weekly jobless claims, a little bit of an uptick. So when you kind of continue to go through these jobs numbers, you're certainly seeing a slowing in the labor market on top of the idea that, some of these big AI data center build-outs are kind of sucking some of these laborers back to that sort of the marketplace. And the immigration backdrop certainly not helping something like, for example, the real estate market. So certainly plenty of headwinds with regard to what we're seeing coming from the labor market side. And that partially goes into why maybe that growth backdrop might not be quite as supportive as maybe some think.
How about commodities? Copper, for example, or copper-related plays. I mean, I'm thinking about mining stocks. Freeport, McMoran would be an example, not necessarily that stock.
I think the backdrop for commodities is still pretty strong, right? I think you've got some supply and demand imbalances here. Part of that being driven obviously by the AI infrastructure build out, whether it's the data centers themselves or just the electrical grid, so to speak. But I think maybe something that's not quite as appreciated as much is the defense stockpiling that we're going to have to go through.
You're right.
A lot of these military upgrades are going to require these raw materials, and so from that perspective, the national security angle here certainly can see commodity prices continuing to be supportive going forward, especially on the industrial side of the raw materials equation.
And just swinging back to tech, you are looking for companies that will specifically gain from AI, but you're less keen on the Mag 7 names. You're not overweighting those.
Yeah, I think what we're seeing with the Mag 7, last year, I think it was sort of the benefit of the doubt, and that started to change towards the end of the year where investors were starting to question the CapEx spend, and they wanted to see what kind of return on invested capital they would be getting. I think you can then take that a step further, and the Mag 7 is certainly putting up some massive revenue numbers, but I think we're starting to question the potential for margin growth that might be coming back down a bit, and certainly that free cash flow number coming back down again. So when you start to compare those latter to the broader market, maybe that big, when you had the Mag 7, really the huge leadership on that front, it's coming more and more back in line with the marketplace. And as a result, you're seeing some of the re-rating that's going on there. So I think it's tough to make a play on Mag 7. You're going to have huge winners and big losers there. But at the same time, those wide moats, I think, are starting to kind of sort of come back closer to the broad market. And I think it's what we're seeing right now.
Jack, thank you very much indeed for joining us.
Thank you.
Jack Janasiewicz, Portfolio Manager at Natixis Investment Manager Solutions. Up next, U.S. President Donald Trump threatening to shut down the Gordie Howe Bridge, paid for by Canadian taxpayers, before it even opens. What could that mean for Canada-U.S. trade? That's ahead. U.S. President Donald Trump is threatening to block a new bridge between Windsor, Ontario and Detroit unless the U.S. is, quote, fully compensated for everything he says it has given Canada. Let's get more from CTV's Judy Trin. Judy, thanks for joining us. Just remind us, what is President Trump beefing about here, please?
Andrew, you know, this involves the most busy trade corridor between Canada and the U.S. That is the trade corridor between Windsor and Detroit. This is a new bridge that's set to open in a few weeks. It is the Gordie Howe International Bridge. It cost $6.4 billion to build. And in his Truth Social post last night, Donald Trump complained that the U.S. was being treated unfairly and that he wants to renegotiate the terms of this bridge. This bridge agreement was negotiated in 2012 under the administration of President Barack Obama. And what it involves, Andrew, is the fact that because trade is so congested between the U.S. and Canada along that corridor, they wanted a second border crossing. The state of Michigan was unwilling to pay for it at the time, so Canadians, federal government said it would foot the bill first. And then what would happen is that once it opened, it would recoup the costs by collecting tolls. And once the tolls were collected and the costs recouped, then the revenue would be shared between the state of Michigan and Canada. Trump said that the Canadian government got around the Buy American policy, that it didn't use American workers and it didn't use American steel. And Andrew, that's not true at all, because American steel, American workers were used on their side of the border in building the bridge, and Canadian steel and Canadian workers were used on our side, Andrew.
And of course, a Detroit family has long had a lock on bridges across Detroit and is looking now for compensation. But Judy, can you give us a little more colour? Could this be disruptive to US-Canada trade if the bridge doesn't open?
Well, let's put it this way. Right now, along the other major corridor there, the Ambassador Bridge, which is near it, 40,000 vehicles cross daily. That's 25% of Canada-U.S. trade. So the whole idea about this bridge is to alleviate that congestion and to deal with expanded trade. You were right to say that the family that owns the Ambassador Bridge, which is a privately owned bridge, has previously tried to block this bridge from being constructed. It appealed to the owners, appealed to Donald Trump in 2018 during his last administration. So once again, Donald Trump is using that as a wedge issue. He's once again interfering. He's issuing his grievances. And you know what, Andrew? What does Donald Trump want, right? So let's take a look at this in context. He complained about tariffs on American dairy products in his social media post. He complained that Canada is taking U.S. alcohol products off its shelves. And he's complaining about Prime Minister Mark Carney's deal with China, which he says will lead to the elimination of hockey and the Stanley Cup. So some of his tirade does not make sense at all.
Judy, thank you very much indeed. Judy Trin, our colleague at CTV News. Coming up, Oracle shares have been out of favour. People worried about the debt and heavy spending. But they got a decent pop yesterday after one analyst upgraded the stock. We'll have more from that analyst next. Shares in Oracle posted a sharp rally yesterday, with one stock watcher upgrading his rating on the name to a buy, partly because of optimism about OpenAI. We were joined by Gil Luria, head of technology research at D.A. Davidson.
The market has decided that Google is the only winner in AI, and that the whole complex of companies around OpenAI are just not going to win as much. You can tell that by the stock performance over the last 6 months, where Google has significantly outperformed NVIDIA, Microsoft, Oracle, and CoreWeave. And we argue that that's not necessarily the case. The race is still on, and OpenAI has room in that race. They've done a few good things. One good thing they did is really focus on the two most important parts of the business, having a great frontier model and then having a support for ChatGPT, including turning on ads there. That's a good decision to be focused. The other thing that's happened is because there's the perception that Google's running away with AI, Microsoft, Amazon, and NVIDIA now have a very strong incentive to invest in OpenAI. So it looks to be able to raise up to $100 billion of additional capital by the end of March. And then finally, OpenAI is looking to introduce the most advanced model over the next few days and weeks. And if that model actually becomes better than Google's most recent Gemini model by any benchmark or by some benchmarks, then the perception that OpenAI is out of the race will probably change between having the best model, having capital on hand, and that will serve their orbit, the OpenAI complex, which is primarily NVIDIA and Microsoft, but also Oracle that has a lot riding on OpenAI being successful.
Okay, I do want to talk about that new model you just mentioned, but just first off, you also said, the race to AI very much not finished yet. Given the fact that Oracle and OpenAI have some funding obligations expanding well past 2026, to what extent is your upgrade based on short-term factors, do you think?
Well, it's short to medium term in the sense that if OpenAI raises $100 billion and they have nearly $40 billion on hand, that can fund them for at least a couple of years, if not more, as it helps them get the compute that helps them ramp revenue and then pay for future obligations. So that fundraise will really buy them a long runway. For Oracle, they just raised their own capital in order to build out the infrastructure. As long as they complete that debt and equity offering successfully, they'll be able to have at least a year of building out this infrastructure and set themselves up next year to revisit those decisions. So our call is a year out. And again, we think OpenAI has an even longer runway, assuming they are able to complete this fundraise successfully.
Why do you believe that OpenAI's model is as strong or stronger than its competitors? We're going back to that model that you were talking about in your first answer.
Well, just the most recent version that they published, the 5.3 model, it's the first model trained on NVIDIA's Blackwell chips, and it already appears to be competitive with Gemini. So that's only a small incremental improvement. If they can have a bigger incremental improvement, which is being reported now that it's on its way, I think that'll grab people's attention. Internally, we have my colleague Alex Platt benchmarks these models. He thinks that Google's lead is very small, if any, and that a new model from OpenAI, assuming it represents a bigger leap forward, should take the #1 spot.
Why do you think, though, that the market was so quick to suggest that Google's kind of DeepMind and Anthropic were gaining such a momentum over competitors, including OpenAI?
I think it's a pendulum, right? Because just 6 months ago, everybody thought Google was the biggest loser, and it was trading at 18 times earnings and was left for dead. And then Gemini worked out, and Google Cloud started to accelerate, and there was talk about selling TPUs externally, and the narrative just shifted all the way to the other extreme, which is Google is the only winner. We think reality, as is in many cases, is somewhere in the middle. It's not a loser, it's not the only winner, it's a winner based on the fact that it has a great lab, it has the chips, it has the cloud, and they can deliver on those things. It's just that the race is not nearly over.
I know we were talking about this today, OpenAI's decision to introduce ads on its platform. I know you say this is important for monetization, reducing cash burn, but could this maybe hurt OpenAI in the end when some competitors don't have ads?
Not if they do it well. Let's not forget, Google's already presenting us with ads on the way to Gemini. It's not in the chat, which is what Anthropic was trying to poke fun at OpenAI at the Super Bowl yesterday. It's around the chat. It's before the chat. It's after the chat. Those are the types of ads we're going to see. We're not going to see ads in our conversation with ChatGPT. And as long as ChatGPT and OpenAI keep it like that, where you're seeing in the free version ads on the way to the chat or after the chat, they're not going to hurt themselves because consumers have gotten accustomed to this with Google. Not just Google search, but also Gemini. You're seeing a lot of ads on the way to your chat with Gemini. Consumers are okay with that as long as the chat's not about the advertising process.
And just lastly, before I let you go, very quickly, do you not think that this is maybe the future anyways of AI platforms having ads on their platforms, like for many companies, even though Anthropic said that they wouldn't do that?
In the free version, I would expect this is a lot like streaming. There's going to be a paid version, a subscription version that's ad-free. And then if you want the free version, you'll have to see at least some ads. That's the normal balance that's been struck on the internet for many years. This is just another iteration of that.
Gil Luria, head of the technology research outfit at D.A. Davidson. We've got lots more coming up on The Open. Welcome to the second hour of our show. Let's check out the big stories we are bringing you from the newsroom. U.S. President Donald Trump is threatening to block the opening of the new Gordie Howe International Bridge between Windsor, Ontario and Detroit, unless, he says, the U.S. gets compensation that it deserves. Trump says Canada has gained unfairly from the project, although the bridge is publicly owned by Canada and the state of Michigan. With Canadian taxpayers paying for construction, the plan is to recoup costs through tolls. The long-awaited crossing is nearly complete and expected to open later this year. Air Transat, WestJet and Air Canada suspending all flights to Cuba due to the island's fuel shortage. Cuba has warned airlines that they won't be able to refuel at its main airport for at least a month. The carriers say flights will be suspended until the end of April. And Air Transat and WestJet are sending aircraft to bring customers back, and they say they'll carry enough fuel to safely depart without relying on local supplies. Shares in Vizsla Silver taking another hit today. Mexican authorities say at least 5 workers from the Canadian miners' operations in Mexico have been found dead. That's after 10 people were abducted from the company's site last month. The Mexican government says 5 bodies, other bodies have been recovered, and they're working to identify the individuals. Vizsla suspended operations at the site last month. And let's have a look at the markets here. Both the TSX and the US equities trading near to record highs, but not quite there. You can see the TSX, though. What a run it's had. It is almost at record highs. And shares like Bank of Nova Scotia, BMO hitting at or near record highs today. So far this year, 2026, the TSX, which is up over 2% in the past week. Let me give you a year to date, because it's been another relatively good year. 4.5% our market is up so far this year, boosted by gold, of course. And the S&P 500, let's have a look at the US benchmarks, is up around 1.7%. S&P 500 not quite back into record territory, I don't believe, but that's a moving target. Where are we? Just under 6,980. In fact, we've just crossed it. Up, yeah, we're trading around it, yeah, but the US market did just hit a record high. Gold has been blasting to new records this year. Holding today, last time I checked, above the $5,000 US level. Are these long-term drivers still in place? So-called currency debasement, etc. We're joined by Brooke Thackeray, research analyst at Global X Investments Canada. Brooke, thanks very much indeed for joining us.
Thank you.
I mean, the big question, I guess, with gold, or one big question, is it a crowded trade? Has everybody done their buying?
I don't think so. I mean, if you take a look at excitement around gold in the media. It's been really hot. But if you take a look at actual investors buying into the gold trade, buying gold ETFs, it's still in the Western markets has actually been quite small. Gold's still a relatively small portion of investors' portfolios and institutions' portfolios. So I don't think we're done. I think the drivers are still there. We still have the central banks, the Eastern central banks mainly, buying a lot of gold. China just announced it's had 15 months in a row of net buying gold. So the major drivers are there. We've seen some volatility, obviously, with gold. I expect that to happen, but I think we're going to be range-bound here for a bit.
What about silver? I see a strategist at BNP Paribas is saying that silver, which has had that incredible run, is likely to underperform gold in the next while because it doesn't have that cachet or that established presence as a hedge against political risk.
Yeah, and central banks aren't buying silver. I think silver had a fantastic run. It became almost a little bit meme-like, and I don't think that's going to continue at that level. If you take a look at something like the gold to silver ratio, silver became extremely cheap in early 2025, and now it's really become about average compared to historical norms, and the silver trade's really being pushed up by the consumers, the retail consumers in the East. I mean, there are other factors, so it's a bit different. I think gold can actually probably do a little bit better here compared to silver.
The U.S. dollar, let's put up a 5-year chart for the U.S. dollar. If there was a major rally in the greenback, that presumably would put pressure on gold.
Yes. If we take a look, though, it has broken that relationship several times over the last couple of years. But I think at this point, when we're in a consolidation period, that if we do see the U.S. dollar gain some strength, I think that would put pressure on gold and silver. But previously, we've seen the U.S. dollar do okay and gold also do well at the same time because investors were focusing on the currency debasement trade. I think they pulled back on that narrative a little bit, and they're going to more closely react to the U.S. dollar. Like yesterday, we saw the U.S. dollar get hit in international markets, and gold did well. But so a lot does depend on the U.S. dollar. I think it's one of the most important variables for investors to be following in the markets right now. Even if you're a stock investor or a bond investor, I think the U.S. dollar is one of the drivers that's going to affect not just gold and silver, but other parts of the market.
What about Air Canada? We now learned that WestJet, Transat, and Air Canada all suspending flights to Cuba because of the fuel crisis on that island. What's your view on Air Canada, though? Are you keen on that stock? Obviously, tremendous leverage once you've got this massive fixed cost base, but once demand takes off, when and if it does, your profits can rise rapidly.
Yeah, the Cuban situation, I don't think, is a big impact on Air Canada overall in the grand scheme of things. We've had a couple things. Late 2025, we saw the flight attendant strike. Then we've seen airlines, including Air Canada, cut back trips to the U.S., which has had a bit of an impact. International travel has still been strong, and all indications are that it's surprising to me how strong it is. That it's still there. I think it's a little precarious on a go-forward basis. We've seen a lot of, as far as the spending goes, from consumers at the lower income groups has just fallen off the face of the earth, and that's slowly coming higher. Air traffic or trips is still maintained okay here. I'm concerned that we might see that actually turn down later on in 2026. I think, Air Canada has really consolidated over the last while here. It really hasn't done very much. It's had some spurts and pulled back. So it hasn't really been a great stock from that perspective. I don't see anything changing. I don't see major drivers to push this stock much higher. It's had a couple little blows here that start to add up against it, but I don't see a big driver to move the stock higher. This is not a stock that I would be looking at this time.
What about Shopify? It's getting a decent rally today, but it's way down from the start of the year. Wow, it was $215 at the start of the year, and now only about, as you can see, 171 in Toronto trading. Is this a name you're interested in?
Well, I think we could see a bounce in Shopify here. We saw that yesterday. We saw it today as well. They report their earnings before the bell tomorrow morning. And I think investors are positioning themselves for that. There's just this AI dynamic is a very fluid situation about who the players are, who's winning and who's not winning, and who's going to lead in the future. And we've seen the software stocks overall as a group just get absolutely pummeled, and Shopify was in that group. It didn't matter. I mean, Thomson Reuters the other day went down huge, 15% in one day because of an announcement by Claude, basically, or the agentic experience as far as that goes with Anthropic. But I think Shopify is going to lead the way. If you take a look at where consumers are actually going to experience AI other than searches, right now the average person is just using AI for searches instead of using Google. They're actually going to AI and doing a search, and they're finding value in that. But where are they actually going to use it to do something beyond that? And I think the first beachhead is going to be in the whole shopping experience. And Shopify is really working extremely hard on this with the UCP, the Universal Commerce Protocol. And they really want to create this experience for consumers to go in, and so you'd have an agent, go and find products for you, compare products for you, recommend products, use coupon codes, check out for you. So I think there's going to be a lot of winners and losers in there, and I think Shopify is going to do quite well with that. I think the losers are going to be some of the smaller companies that just can't keep up with the scale.
I've noticed now when you're watching an Amazon ad on Prime, they have a link for you to click on to actually buy the thing. So yeah, we're just in the early days of this.
Yeah, and if you take a look at Google, I mean, I saw Elizabeth Warren, complain that Google was now putting in, complaint that Gemini is taking you right to the instant cart.
Yes.
So that space, that shopping space, is really going to heat up in competition. But I think Shopify is still in a good position given its current client base.
Yeah, that's interesting. Yeah, Elizabeth Warren, the Democratic senator in the U.S., saying this is blurring the line. Is AI, is it actually advising you on what product to buy, or is it selling you that product?
Yeah, well, I mean, it's going to be, I think, a little bit of both, actually, in the end. If we take a look at what AI has done in some of the conversations that it's had with people over time, there's been that line being blurred back and forth. And that in the shopping, that's going to be hard to control because it will be making comparisons for products and outlining, and it will probably have a bias as well. It'd be interesting to see what the algorithms underneath, when they're making a comparison. If let's say Google is receiving money from somebody for premium support, if their recommendations are actually being biased. They'll say that it isn't. I hope it isn't, and maybe it won't be, but that's definitely a danger.
Brooke, thanks very much. Brooke Thackeray, a research analyst at Global X Investments Canada. Coming up, notable calls. We are going to have a look at a bullish take on Shopify from ATB. Let's take another look at Shopify. That stock higher today after ATB Capital analyst Martin Toner raised his team's recommendation on the e-commerce company to outperform from sector perform with a price target of $250 Canadian. Toner says that while the broader software as a service landscape is struggling with the risk of slowing growth and a rising threat from AI, his team thinks Shopify is sitting in attractive territory and is well positioned to be a capital-light beneficiary from AI. He says, while it is too early to see in the data, we believe Shopify's agentic commerce stack has strong growth potential. And UBS is out with a call on Thomson Reuters, another data and software stock that has been pushed down by AI concerns. UBS says that accelerating fundamentals will help ease AI fears. The analyst, Kevin McVeigh, says the sell-off over Gen AI disruption fears has been excessive, and that the market is missing the nature of the proprietary nature of Thomson's data sets. Thomson has this data to itself to sell. The company, the analyst says, has a meaningful amount of legal cases that aren't readily available. The analyst has a buy rating on the stock with a $215 US price target. Yesterday on Market Call, we were joined by Brian Madden, Chief Investment Officer at First Avenue Investment Counsel. His focus, North American equities. And his top picks were Small World, Shopify, Service Corporation, and Lennox. And today on Market Call, it's Julian Nono-Womdim, VP Equity Analyst at Goodread Investment Counsel, and his focus, U.S. equities. Coming up, the ETF report. We're going to zero in on 3 crypto ETFs. Stick with us. Time for the ETF report. We're zeroing in on 3 crypto ETFs. Our guest says, despite the sell-off we've seen in Bitcoin, if you zoom out, the fundamental backdrop keeps improving. Let's bring in Mike Philbrick, CEO of Resolve Asset Management. Mike, always great to see you. Just remind us, over the past 2 years or so, the advent of crypto ETFs has really revolutionized the space.
It certainly has, and the current drawdown is a reminder that crypto does remain a highly volatile asset and a reflexive market. You know, when momentum breaks, the decline is often amplified by a leverage unwind and liquidations, which we have seen over the last several months. At the same time, as you point out, ETFs have brought in billions of dollars, and the asset itself is garnering attention and becoming more mainstream. You know, one of the biggest challenges to adoption was the regulatory framework out there. That's what institutions were saying, and they're getting more and more of that clarity as we see.
Let's get into 3 ETFs and their different features here. Start off with one that's pretty straightforward, IBIT. It's the iShares Bitcoin ETF, and it simply is designed to reflect the price of Bitcoin.
Correct. And they're going to hold the actual Bitcoin in the ETF structure. And this is from iShares. And it's really the cleanest way to have a Bitcoin allocation sleeve that you can simply rebalance to. And I think rebalancing is incredibly important with the volatility in this asset class. So it allows for easy portfolio implementation aside the other assets that you have in your portfolio. And this IBIT ETF for iShares is the most profitable ETF in the iShares lineup, too, just showing that the asset class has merit to some degree.
Well, what do you mean profitable for the provider, Mike?
Yeah, for iShares, actually. And this particular ETF is, in the 40 basis point range for cost. So it makes it one of the low-cost providers for the Canadian investor to invest in if they're looking to have a Bitcoin sleeve in their portfolio.
But it's profitable just because of the flow through of the management fee?
Yeah, because and the sheer size of it, and the fact that it's a little bit harder to custody, so they charge a little bit more than, let's say, your typical S&P ETF, which will charge 2, 3, 4 basis points. 40 basis points is quite a bit higher than that. Due to the newness of the asset class and the way you have to custody it. So again, iShares has a vested interest in making sure that the product remains viable.
Your next idea is FETH. It's the Fidelity Advantage Ether ETF. And of course, Ether is a slightly different beast from Bitcoin. What's the attraction here for investors?
Well, ETH is the smart contract layer of the digital asset world. And, the Ethereum network is getting a lot of play just because we're hearing a lot about stable coins, and most stable coins are built on the Ethereum network. And, this is where we see stable coins being legitimized through the Genius Act, and now getting more clarity as it works through the Clarity Act to provide that buyer of short-term U.S. treasuries. And all of that leads back to Ethereum being the base layer underneath that. So this is the smart contract layer, a little bit more of a technology play with a bit of store of value. And you're seeing that adoption of stable coins grow dramatically, as well as the potential for the tokenization of further real-world assets. You're seeing it in money market funds. Next will likely be bonds. And we're seeing from the regulators, both the SEC and the CFTC, this clarity of regulation on how they're going to be regulated, clarity from taxation. And so this smart contract layer really enables the transaction layer at a much higher speed than we have in banking currently.
And I think you mentioned tokenization, and that's really a version of these other securities that can be traded easily on digital platforms.
Right. And the settlement layer. So, we have a T plus format. So if you buy a stock, the settlement is T plus a day. And that full day, where's that capital sit? Whereas if you were trading on a tokenized ledger, that happens immediately. And so you get better use of your capital and more velocity of money just generally in the economy.
And this final one is a broader ETF, NCIQ, US listed, and it's the Hashdex NASDAQ Crypto Index US ETF, and it's a multi-asset crypto play here.
Yes, and so what you're looking at here with this ETF is rather than trying to sort of say, well, I want to be a Bitcoin fan or I want to be an Ethereum fan. This just takes a market cap approach. So in this ETF, you have Bitcoin representing about 77%, Ethereum 12%, XRP 6%, Solana 3%, and a few others. So you're kind of taking a Boggle approach, if you will, or a Vanguard approach, where you're saying, well, I don't know which technology or which crypto asset is going to perform, so I'm just going to buy them in their market cap weight. And this gives you a little broader exposure. Now, this one trades in the U.S., so you have, if you don't want to deal with the U.S. exchange and those types of things, there's some challenges there. And as we say, the majority is Bitcoin at 77% and Ethereum at 12%. But it gives you sort of a full view of the market cap area of digital assets. And I think investors do want to think about this from the perspective of making sure they do a small and intentional allocation.
Mike, thank you very much indeed. Mike Philbrick, CEO at Resolve Asset Management. Up next, the latest headlines, and we'll update you on some of the movers on the TSX. U.S. President Donald Trump is threatening to block the opening of a new bridge that connects Michigan and Ontario. Trump says he will start talks with Canada immediately, but won't allow the bridge to open until the U.S. is fully compensated and given ownership of half of it. Michigan's governor says the bridge was paid for by Canadian taxpayers and built by union workers from both countries, and it's going to be operated under a joint ownership agreement between Michigan and Canada. I just saw a headline that Prime Minister Mr. McCartney said he has spoken on this bridge problem with the U.S. president. Shares in Organigram, the cannabis seller, trading lower. That's after the company posted first quarter revenue that came in below what analysts had been expecting. The company posted adjusted earnings that also fell short. However, Organigram did swing to a profit, but that was driven by higher valuation gains tied to shares held by British American Tobacco. Shares in BP sliding 7%. The energy company is halting share buybacks as it faces increasing pressure to deliver on a turnaround. The UK-based company also plans to extend cost cuts through the end of 2027. BP is now the only one of the top 5 oil majors without a share repurchase program. The company's fourth quarter profit did come in line with analysts' estimates. And there is a look at the markets. You can see they are higher, trading close to or at record highs. Let me just have a quick look at the TSX. I should write down a post-it note for the actual high for our market. We're still about 10 points short of our record high close on January 28th. The S&P 500 also moving up. Let's check out some stocks on the move in Toronto. OpenText is among the winners today, up 5%. The company is hiking its share repurchase program to $500 million, $500 million US. Let's have a look there at ATS. ATS is higher. That is a company that helps automate manufacturers around the world. They reported earnings a few days ago that were well received. JP Morgan saying that across their end markets, there was strength led by energy, consumer, food and beverages, and life sciences. There were some declines, including in transport. And you can see 5N Plus, the player in rare materials, specialty industrial materials also up. And let's have a look. Well, we talked about Shopify already. ATB hiking that stock to an outperform on AI potential. And let's have a look at there's Shopify up 7%, but down sharply this year. Let's have a look at some losers in Toronto. Vizsla Silver confirming the death of 5 employees who were kidnapped from its site in Mexico. And apparently another 5 bodies have been found, but they have not been identified. Energy Fuels, always volatile, seeing some selling today, but that uranium stock has caught a lot of investor interest over the past year. The shares are up 4-fold. Energy Fuels in the past 12 months is up 315%. And then finally, TransAlta. Wow, I didn't know Energy Fuels was up that much. TransAlta, the electricity provider. I'm not seeing anything that would account for the drop there. The yield on that utility stock, if you're interested, not very high actually, 1.5%. Canada is pursuing free trade agreements with a number of countries and intergovernmental bodies as the global trade and supply chain is remade in the wake of U.S. tariffs. Canada's Minister of International Trade, Maninder Sidhu, spoke to Bloomberg's Daybreak anchor, Lizzie Burden in Singapore. Let's have a listen.
It really speaks to, our focus and our goal of doubling non-U.S. exports to the tune of $300 billion. And what does that mean? It means more opportunities for Canada here in the Indo-Pacific, in Asia, but of course it means more opportunities in Europe for Canadian exporters. And so as we lead up to it, there's, if you look at how fast Asia is growing, they need more energy. With the data centers popping up everywhere, they're looking at Canada for that energy, but they're also looking at Canada for food security in terms of agriculture goods, but also critical minerals. As you know, Canada is resource rich in that. And so at a time when you're seeing a lot of ruptures in the global trading system, Canada is seen as a reliable, stable partner. And those are the phone calls that we're getting, is that we want to do more with Canada. And you've heard that from the Prime Minister's speech in Davos when we were there together, was about middle powers coming together and really respecting rules-based trade and pushing forward.
OK, loads to unpack here. You mentioned energy. What have you been hearing on your travels about appetite for Canadian exports like energy specifically?
Yeah, around LNG is what I'm hearing. Currently we've got 5 different projects in various phases of development. It was a milestone moment for Canada with our LNG Canada 1 project in June, our first ever large-scale LNG shipment going to Asia outside of the U.S. And so that speaks to our diversification efforts. How I'm going to get to a $300 billion target is obviously through energies. And so you're seeing that those projects are being built, they're being developed. But we're fast-tracking many of those projects through legislation that we've changed in June. Canada is now building at much faster, much quicker speeds than we've ever done in the past. And so as Asia builds, as they build data centers, as they grow year over year, you speak about India, 6, 7, 8% growth year over year. They need 70% more energy by 2040. Guess what? Canada's well positioned to serve those markets.
And give us a sense, Minister, of how much Singaporean appetite you've seen to invest in Canadian ports, for example. Have you had any meetings around that?
Yeah, absolutely. I mean, when you come back to our strategy and our take on hitting the $300 billion of exports, additional exports, we're going to need to add capacity at our ports. And so we're doing that. We've got a $5 billion trade corridor fund as a federal government, but we're also working with partners. I've met with PSA, we've met with GIC, Temasek. They are all comfortable investing in Canadian ports, in Canadian infrastructure projects, and there's conversations to do even more in Canada. And, you know, just in the Gulf region, I was there a few weeks ago. They've committed to doing about $70 billion of investments in Canada, in infrastructure, in mining, in energy projects. And so we're building up capacity, and we're welcoming investments from all around the world.
And what's the latest on the Canada-ASEAN FTA that Prime Minister Mark Carney pledged to finalise this year?
Yeah, Philippines is now the chair of the ASEAN, and we're continuing to have conversations with the Philippines to get it through. Of course, there's many partners, as you know, over 10 partners in the ASEAN region that we need to continue to engage with, continue to explore opportunities. But we're having active negotiations. Our negotiators are in Jakarta this week having their round of negotiations, and we'll continue pushing forward. The Philippines has made Canada one of their priorities as the chair, and so we'll continue engaging with that. But you know, this year alone, since you asked about FTAs, free trade agreements, we've got a handful that we're moving forward on with India, Philippines, Thailand, UAE, Saudi Arabia, ASEAN, Mercosur. And so you see there's a lot of work ahead of us, but I think the appetite is there from many of our partners around the world to make sure that trade works. Just in the past 9 months alone, we are moving really fast at record speeds. We typically sign one agreement a year. In 9 months, we've done multiple agreements with the UAE, with Indonesia, with Ecuador, many others. And so there's an appetite there to do more with Canada. As I said to you before, it's about reliable, rules-based trade, and Canada stands for that.
You're a busy man, Minister. Which of those deals is closest to the finish line?
So we just completed Indonesia, Ecuador, and the UAE. We're starting with India in the coming weeks. Philippines as well. It was something that we signaled when we were in Malaysia not too long ago. But of course, we're going to continue moving forward. Mercosur is another one of those important trading partners. But again, when you're dealing with multiple countries, you need to make sure you match their speed and energy. And we're going to continue to have those conversations to push forward.
And Canada signed this deal with China to cut tariffs and attract Chinese auto investment. Of course, that drew the ire of President Trump. Coming back to my original question, Minister, how is Canada balancing the upcoming USMCA talks with your push to grow non-US exports?
Yeah, when it comes to the U.S., look, they're our number one trading partner, will always be an important trading partner to Canada, and those discussions will continue. There's another minister, Minister LeBlanc, that's in charge of Canada-U.S. relations. My focus is on international trade diversification, and so I was with Prime Minister Carney in China a few weeks ago. It was to make sure that we're exploring opportunities, but also to work through some tariff challenges that we were having in the agriculture sector, and we were happy to come with an arrangement to give our roughly $7 billion of agriculture products preferential access to the Chinese market. So resolving that was very important, but also unlocking opportunities around electric vehicles. And so we're going to be allowing up to 49,000 vehicles into the Canadian market with the hope of joint venture partnerships, between Chinese and Canadian companies to build those EVs in Canada. We're a large market. Canadians consume or they purchase about 1.5 million vehicles every single year. They're asking for more options, but it's not just with the Chinese. We had the South Koreans there last week. I hosted Hyundai. They're looking at opportunities in Canada. And just earlier today, we had the German Minister of Economy visit Canada to talk about some type of economic cooperation between Canada and Germany, but also to explore cooperation around automobile manufacturing. And so this is a conversation that's happening with many countries. And why is that? I think it's important to mention is on the mining resources, we are heavy resources in terms of what we have. We're the only country in the Western Hemisphere that have every single element to make an electric battery. And so I think it's important we have those conversations. And this is why automakers are looking towards Canada, and we welcome that.
Coming up, hot picks, we are going to zero in on pharma and biotech. And our guest says Lululemon Eli Lilly has lots of upside. That's ahead. On Hot Picks today, we are focusing on one of our favorite sectors, biotech and pharma. Our guest has Eli Lilly as a top selection. He sees growth for this drug giant amid continued success in the weight loss drug boom. Let's get more from Jeff Meacham, Global Head of Healthcare at Citi. Jeff, thanks very much indeed for joining us. You do like the look of Lilly. Is it not a real threat, though, that we're going to be seeing generic competition emerging in the semaglutide space?
Great. Well, first of all, thanks for having me. Yeah, I think the market's big enough for multiple players, generics, and branded drugs. But I wouldn't worry about, generic semaglutide. I do feel like with Lilly's injectable business, Zepbound and Mounjaro are both growing nicely. But also, orforglipron is really one of the reasons why you want to own this stock is their pill, which is going to launch, in a maybe an April timeframe. I think it's going to really dominate.
And that, of course, is a pill weight loss drug.
That's correct. Yeah.
They have other irons in the fire, though. They have a medicine in inflammation as well. Can you tell us a bit about that?
Yeah. Yeah. So what's interesting is that the GLP-1 mechanism of action is broadly applicable. And what Lilly's finding is that it could help amplify the clinical effect in other diseases. So they just recently had data, for an inflammation drug, Taltz, that the GLP-1 makes it better. So I think that could, provide an extra leg of fuel for their inflammation business. Maybe down the road, oncology or neurology, GLP-1s work, in a broad way. And I think that that's something that obviously not in the stock at all.
Can we move on to Vertex Pharmaceuticals? They're one of their core businesses, cystic fibrosis.
Yeah, this is a great business for them. There are very few competitors here. Vertex is really dominated and probably should continue to dominate really. And the IP goes really quite far out. We're talking late 2030s. The issue with Vertex is really, what is the encore to their success, right? So they have a drug for non-opioid pain relief, and they have a cell therapy, a gene-edited product for sickle cell anemia and beta thalassemia. And now they're adding a drug. We'll see maybe this Thursday when they report, fourth quarter earnings. There's a drug for a kidney disease called IgAN. So a fourth, drug to the mix here. So that's probably the bigger focus of Vertex. The CF business, I wouldn't ever say autopilot, but it definitely feels like, it's sort of, it's going on autopilot.
And then Regeneron Pharmaceuticals, you see this stock climbing to the $900 range. What are their crucial growth areas?
Yeah, so Regeneron has had for many years, three legacy businesses. So Eylea for an ophthalmology drug, Dupixent, which is a drug for many different types of inflammation conditions, and then Libtayo, which is an oncology drug. Those are still, growing nicely. Eylea has had some generic competition and had some branded competition, but that's fine. It's held its own. But the reason why we like the stock here is the pipeline. So they have a next-gen drug for melanoma that could be, anytime in the next couple of months. And then a very, very deep pipeline in the oncology hematology franchise that, in the next, call it 1 to 2 years, we'll see a lot of data points, a lot of phase 3 reveals, phase 2 reveals that should be very positive for the stock.
What is the latest thing in oncology? Can you generalize for us? What are promising areas of research right now and new drug development?
Yep. Yeah. There are a couple different technologies that have been used. Antibody drug conjugates. This is where you attach a toxic payload, a bit of a silver bullet approach to a tumor. And then immuno-oncology, same thing. It's tools that have been around for a few years, but we're getting much better at engineering more specific immune responses to the tune of what called bispecific antibodies. So there's a lot of excitement there, and there's a lot of companies in the mix too. So it's not just about gene and cell therapy. There are many, very, I would say, validated and foundational technologies that are still growing quite nicely.
And a company like Regeneron, what's a crucial driver? I mean, they obviously want to get a blockbuster. Everybody does. Would they ultimately get taken out if their product is big enough?
It's a great question. Yeah, it's one of the bigger, larger cap biotechs by market cap. But they have a very deep science, a great, technology platform, and they're in multiple areas. So I think the big driver here would just be, turning the data card over on many different things in the oncology hematology pipeline, but also the inflammation pipeline. Those are the two core areas for them. It's not that, that they need more, but I think they have so many assets that are in early to mid development that are really kind of, could be groundbreaking. We'll have to see.
Sorry, what do you mean by turn the data card over?
Just release the final, phase 2 or phase 3 data. In other words, did the trial work or not, right? Did the drug work or not in a clinical trial? That's probably that's in biotech land. That is one of the bigger binary events that we have, right? You either have a drug or you don't.
Yeah, it's amazing how it's so volatile. It's a binary outcome. Yeah. Thank you very much.
That's right. But you do have a base business, though, that I think supports the downside protection.
So Regeneron has ongoing revenue, in other words.
Yep. Yeah.
Thank you very much, Jeff. Really appreciate it. Jeff Meacham, the Global Head of Healthcare at Citi. Up next, we are going to hear from an aviation analyst on Air Canada suspending service to and from Cuba. We'll be right back. Let's get more on Air Canada suspending service to Cuba as the island grapples with a shortage of fuel. And that, of course, follows America's export blockade on Venezuelan energy. We're joined by Stephen Trent, an independent aviation specialist. Stephen, thanks very much indeed for joining us. Apparently, Air Canada only flies about 16 weekly flights to Cuba, so it's not a huge number.
Correct. And thank you for having me on this morning. It's definitely not a huge number. And you did see, of course, the stock react to that yesterday. I do think in terms of the long-term story, this is going to be a mere hiccup. I think over the short term, certainly there's some dislocation here when we think about what it means for individual passengers and for rerouting opportunities, for example. But I don't see it. I see it far from being a major blow.
But it will be tricky. People who've already bought trips to Cuba, they'll have to work out how to handle them if there's refunds involved, et cetera.
Yeah, absolutely. So those folks, assuming they have refundable tickets, they'll need to be recourse to them. Maybe some of them will want to reroute. And that equipment that and crew that Air Canada had been planning to send to Cuba is probably now going to go to other places. So that's going to take a little bit of time to get through the system. And then we're talking about apparently roughly 3,000 Canadian nationals in Cuba that need to get home. Figure a narrow body aircraft to do those operations, and figure it 20 flights or so, and they can get that cleared out.
So they are introducing apparently a refund program, but I guess the details will emerge to a refund program for people who have booked, allowing customers who had scheduled departures to Cuba and experienced cancellations to apparently automatically receive a full refund in their original form of payment. So they say there's no need for you to contact the Air Canada Vacations Contact Centre. Yeah, my experience, good luck getting through to anyone over there. But anyway, and the other Canadian airlines, hardly surprisingly, following suit.
Yeah, absolutely. So, this is one of those things, clearly that's beyond any of these companies' control when you have these sort of force majeure events. So maybe that's too strong a word to use, but we saw it relatively recently further down in the Caribbean when Venezuelan airspace got closed for a little bit of time, given the military action that occurred in that market. So there are hiccups along the way, but I would say certainly in Air Canada's case, this is relatively short-lived when we think about the long-term story. This is going to be a hiccup, looking at the international strategy of the carrier, the fifth and sixth freedom rights they have through the region, international is a very good opportunity for the carrier. And Cuba is thankfully not that big a piece of the pie.
Can you remind us, do many Americans go to Cuba on holidays, or what is the situation there?
Yeah, sure. So you do have some of the U.S. airlines with flights there, Delta, American, some others. So it is a little bit more complex for U.S. citizens to travel there in terms of the paperwork needed and what have you. Certainly, Canadian and European nationals, it's an easier destination, and probably that's one of the reasons why you really haven't heard about significant dislocation at this juncture of U.S. tourists stuck down there. So Cuba's not a big piece of the pie at all for a U.S. tourist.
Stephen, we better leave it there. Thank you very much indeed for joining us.
And my pleasure.
Stephen Trent, independent aviation specialist. Let's have a quick look at the markets before we go and see what's trading heavily in Toronto, with our market close to record highs. Looking at big value traders right now, Enbridge, biggest dollar value, and there you can see the North American benchmarks. Enbridge up slightly today. Seeing a decent move in Shopify, where there were actually a couple of upgrades for Shopify. That stock jumping 8%. ATB, we mentioned earlier, moving the shares up to outperform. Celestica, let's have a look maybe at a one-year chart for Celestica, because it has ridden this AI spending boom on hardware. However, these concerns that it made, the CLS is the symbol, these concerns that the AI spending frenzy is overdone have weighed on some of these names. So Celestica, a Canadian tech stalwart, has seen its stock. It has advanced 4% this year, but CLS is way down from north of $512 in November, only about $422 right now. Actually, not that bad. Now, $422. I don't know. Oh, that's the US quote right there. Okay, sorry. The Canadian shares in Toronto are trading at $422. And let's have a look at the Canadian Banks Index, because that has been on fire, with more and more banks hitting record highs in Canada. And the TSX Banks Index new record high today. That index, that benchmark of the country's biggest lenders, is up in the past year, as you can see, north of 40%. An incredible rally over the past year. I can't believe it. You are picking up a dividend yield. I mean, if you dividend yield just north of 3%, 3.1%. And finally, let's have a look at oil, another big driver for our market. Oil fluctuating. Still, the focus remains on supply risks in the Middle East. There's a meeting actually coming up between the Israeli leader Benjamin Netanyahu and US President Donald Trump. Thanks very much for watching the Open Morning Markets. Up next.